Today's talk focuses on something we call Tesla stock PTSD. Um, this is Greg from Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. So our talk today first of all, we want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. We also appreciate constructive criticism on things we're doing, particularly sound or video that you think might be enhanced. As you'll notice, we've done a new camera, we've done a new mic. Thanks to Oken and others that have supported us, we're definitely improving. So I also wanted to note that in terms of our show sequence, we have a show we're going to do tomorrow, which is focused on, we made a transition to an iPhone 11 along with a transition to using T-Mobile. And I actually thought the experience was so amazing that I'm actually going to do a show pretty much just on that tomorrow. So we're going to list what the title of the show is and encourage you not to watch if your phone choices aren't of interest. So just a heads up before. We also have a show coming up the next day regarding the Cybertruck and the Semi and kind of what's going on in that realm currently. Our B-roll today is a 2016 view of the Gigafactory. I kind of like this because one, it's slow moving. Two, it gives you a look inside the building versus the finished product that you're always viewing when you currently get photos. So, feedback there also appreciated. So what we wanted to get into today is just the fact that what happened was we were preparing for the show for today, and one of the things we've started doing is kind of a daily, where are we on trading, what might one anticipate heading into the trading day. And so that's kind of what prompted a thought process on my mind, was that we're trying to separate trading from our discussion of other aspects of what's going on with Tesla. But it turns out that occasionally it's still appropriate to have the conversation because we've come a long way to $800 a share from $200 7 months ago. And regardless of what else you're looking at, there's still going to be this lurking question mark of what happened, why, how, and what can one expect as you look into the future. So, I do have one other housekeeping item, and just that's to note that for the whole week, I'll actually be in the greater Los Angeles area towards Redondo Beach area. And we're having a Saturday afternoon at 2 p.m. Lunch meeting. We're targeting somewhere around the LAX airport area, just above or just below. I have to admit, I love Tommy's, which is right next to El Tio's in Culver City, but we're open to suggestions. We're trying to pick a location where people can come from different directions comfortably and at a time of day that wouldn't be too traffic prohibitive. So let us know if of interest. So let's get on to our Tesla stock PTSD. As you know, the stock price bounced around a lot. We kind of anticipated what would happen. The great call that we were able to make based on everything we've seen is just the fact that after earnings last time, the good earnings would trigger more buying by large institutions, and as those institutions were buying, it would put the hedge funds that were short the stock at a bad position, and they would end up having to buy the stock aggressively as it was going up. Hence the dramatic rise in stock price towards 1,000 that we predicted, and it actually happened prior to the 10th as we predicted. So what I wanted to do is, we're kind of in the lull before the storm here. I said kind of because we still have some company news coming out that's influencing the stock price, and as soon as it starts to move, there are a number of professionals whose job it is to take advantage of that movement. So what's kind of going on right now is, we're 3.5 weeks in after earnings. We're 4.5 weeks away from the next round of earnings. And we sort of have a breather where the stock is moving 5 or 10 points a day up or down. And it feels like we're entering somewhat of a new normal, even though we all know that potentially something crazy could happen that pushes the stock around either very high or very low, especially if there are professionals involved. So the first part of what I wanted to say is kind of review what we learned from what just happened with the stock price and sort of why it occurred, as well as sort of include some other sort of thoughts that one might have in the process. So the first thing that we wanted to review is just the idea that there's a new concept for us that I didn't see a lot or so forth when I was heavy trading, but these are basically what's called a bot attack. And what that means is that basically right now, if a bad piece of news comes out on a company, let's call it Tesla, the job of the bots within the hedge funds or large firms is to sell as much as possible immediately as that news hits. So basically, there's a game of who can get shares sold at current prices fast enough to limit the number of losses that the fund actually takes. And so basically, so that's one part of the bot attack. Bad news, sell quickly, then figure out what the news was, good or bad, and then you can buy back into the position if things are fine. You stay out of the position if things are looking bad. And so, that's kind of the back and forth of how this kind of works. So what we were intrigued by is that in this case, there was a sort of a double dip because there's a group of people who are, so in this case at $900 a share, there are a large number of people that had stop losses in. So there are some really sharp traders who recognized that number one, if you could put negative news out there, and then number two, at the same time, if you know the number that people are at for stop losses, you could combine those two elements to accelerate downward pressure or selling on the stock. So this was kind of the combo process that dropped the stock almost 200 points. And so it was pretty interesting to watch all this occur. And as we sort of went through it, we pointed out that the fundamentals of the company hadn't changed, but sort of movement driven by hedge funds sort of manipulating the stock price was, to be expected, and it did occur. And so this prompts the question of, do you know what the number is that are triggering stop losses? I think the number for a large number of people right now is about 750. And so in theory, if the stock starts to head towards 750, you'd see a lot more selling that would help it accelerate down from that point. One, because of the stop losses and people selling automatically at that point. And then two, because the bots may get involved and therefore you could force the stock price down rather dramatically. So we're kind of bringing this up because sometimes when you get into those gaps of time, it gives you a chance to take a breather, figure out what happened, and sort of develop a mental process strategy for what if this happens again, how might you react? I have to give some kudos to the folks that are large holders that at 700 or just below were saying that they were interested in buying more because it was clear that nothing had really changed but the trading activities related to that. So sort of in general here, notable lessons, what are the bots up to? Number one, relative to negative news. Number two, what's going on in terms of stop losses. I'm expecting as the stock gets into the 850s, 870s, we end up with stop losses at the 800. And then, right now I think we're in the 750 range in terms of large numbers of stop losses, given where the stock is currently. So it's not a bad thing to understand where this is and potentially what might occur. So, Then the next issue that pops up is the whole issue of short covering. Um, the percentage of shorts definitely has gotten wrung out as we had this nice run of the stock price. Um, because there's such good trading on Tesla, I expect that the short amount would stay kind of high for the primary reason that there aren't many places you can go to get excellent trading opportunities to make money like this. So even though the shorts don't want to be here and get burnt again, I think there are a lot of people that end up, in it because it's such a good opportunity that it can't be ignored, but one has to carefully manage themselves to be successful in it. So my view of sort of where we are right now is I'm actually waiting for the 3-day rule to apply to Tesla's issuance of the $2 million in bonds. The schedule that we discussed suggests that, Tesla has a nice, 3 to 5% run that should occur, driven by the fact that the institutions now have a chance to review how the raise by Tesla went at 765 and sort of the fruits of that in terms of cash and how that cash might be used and how that improves the balance sheet, et cetera, is all the things that a good analyst would deliver to the large institutions so they can make good decisions on where we are on pricing. There are a lot of places that want, on a monthly basis, get hundreds of millions of dollars that must be invested. And so as those decisions are being made, you can blend in where you can get good potential increases in value. And I think Tesla is definitely one of those places. Hence, there's money to be placed in the stock if all the signs are solid. I would say there's a couple of fly in the ointments that are going on right now. Number one is Apple just announced that they're going to miss their numbers, revenue and profit, driven by slowdown in production in China and the fact that their Chinese customers aren't buying as much given everything that's going on. So it really feels like the whole market currently is sort of weighed down by the potential for more companies to announce, given China challenges, what's going on. So we'll keep you posted on this. Tesla is sort of angling down in sympathy with the rest of the marketplace, but it does have, a large amount of good news that's going on. The other issue is as the markets reopen and we're looking at, well, what happened with how the German slowdown in production is going to affect Tesla's sort of long-term prospects. And I guess we stick with our guns on that one in that there's, not a lot of evidence this will be a long delay, but if it is a long delay, that's when you have to start baking in how this affects numbers for Tesla going forward. So we'll keep an eye on this and update on it, but I can't say there's any huge, terrific news out there, but I do think that, the large institutions haven't really had a chance to react to the news of the $2 billion issuance of stock. And once they do, I think that, it'll have an impact. The one aspect that's not been covered, I thought was interesting is that Jim Cramer did an interview at CNBC maybe 2 months ago or talk. And what he mentioned was that he was talking with the CFO of a large company that he knew. And he asked him about Tesla, and he said, look, if Tesla wanted $2 billion, they could raise that money from the marketplace in a heartbeat. And so I thought it was interesting when he made that comment, because if you watch some of the runs that Tesla's enjoyed recently, Cramer announced that he was capitulating and now a bull on Tesla. Stock price goes bananas. A few weeks later, it sort of coincided with a number of things like good earnings, et cetera. But I think as a fundamental analysis, he's pretty good. His analysis of the $2 billion number I thought was really interesting, because that's exactly what they raised. And I feel like based on the number that was raised, the $2 billion raise that quickly, and it wasn't a big deal, in a lot of different ways, in fact, it was positive, suggests that that $13 billion in debt that Tesla has, that some people are nervous about, given the appetite of the marketplace for its stock, means that there's a lot less pressure to pay that off or address it in a meaningful way versus the growth of the company. simply because the marketplace is happy with what Tesla's doing, and there's plenty of money out there for them to get things done and get it done quickly. So it's not a big deal to continue to grow and just manage the debt that's at lower interest rates anyway on a systematic basis. I'd say for my taste, I would love it if the company would choose to simply issue stock, have no debt, and now have the ability to reload debt, as there are a number of products and factories that still need to be built out, and all that slowed down by the lack of capital sort of sitting around the balance sheet waiting on that aspect of things. So, you know, the idea behind this show was just the idea of PTSD, just the fact that, you know, for example, Vietnam vets that returned, you know, one of the ways they stayed alive was being very quick and if they heard loud noises or movements, reacting aggressively rather than not aggressively and staying alive in the process. And so when it comes to Tesla stock price, yes, there are those of you, from what I could tell, at least 50%, maybe 70% of our viewers who are very committed to Tesla long term and happy that they are. But we also recognize that there are those that are maybe trading or maybe recognizing the fact that they need to jump out, or maybe even be in a position where they're doing stop losses and got stopped out and now have a big tax bill from the stop out. So there are some interesting decisions that folks have to make here, given that particularly the stop loss can save you losing money, you know, versus not. But now you have this big tax bill, and it would have been nice to maybe not have gotten it. But on the other hand, you have the money from the sale. So this introduces sort of a whole bunch of different angles of sort of challenges that one might have to think about as you manage funds going forward, you know, in this period, especially with the coronavirus sort of lurking in its potential. It is impacting Tesla, absolutely, because their sales centers are closed. You know, according to the numbers we saw, 20% of the vehicles produced in Fremont were actually going to the Chinese market. And so one of the suggestions now is that those vehicles, if they're not being delivered to customers in China, are simply being repurposed, you know, into other places where there are orders, so you reduce order times elsewhere with the vehicles that would have gone to China if your sales have slowed down and delivery process has slowed down. So, you know, I don't think there's any huge, you know, difference that's notable yet, but the longer this drags on, I think it starts to affect the future of the company. I don't, you know, I think that with the switch to the Model Y and the expansion of the plant, short term, the next 60 to 90 days, I don't think it's a big deal for Tesla's revenue and earnings, because they do have other places to ship those vehicles. They can generate nice numbers. They actually did already have some Chinese sales, and they can do deliveries directly. You know, the conflicting data there also is the fact that as people can't do public transport, the need for individual vehicles actually is rising. And with the restrictions on ICE vehicles that China has, there's even more compelling reasons why people would switch over to Tesla in this case. And then the final variable I think is important to note here is we talked about the supply chain differential, and meaning that with Tesla having fewer moving parts, there are fewer companies that have to be open producing parts to make Tesla viable compared to the ICE vehicles that are out there. So I think there's a better chance that, you know, Tesla can weather the storm of this, because the people still have to buy electric, and Tesla can source parts in China or out of China depending on you know, whose factory is open or not in order to get a finished product out. So we look forward to keeping track of this for you, with you. Congratulations to those of you who are long-term holders that aren't on the jump in and jump out plan, because obviously that could be sort of mentally draining to engage in that. We also wanted to, and if you are on the in and out plan relative to picking up some nice cash in the process, obviously keeping your eyes peeled. And I do think we're in a 3-day or so we kind of expect for this week for it to move in a similar directions to previous, which is, you know, kind of a strong early part of the week into Thursday, And as we enter Friday, some pinning action to reduce the stock price so that they can, have people's options expiring worthless. The only other thing that I would say that I think is kind of interesting to watch is that every stock kind of has a rhythm of how it trades. So that in Tesla's case, it's kind of a peaking in the morning, dropping in the middle of the day, and at the end, it's kind of like a sine curve. End of day, it kind of rises again. So I wanted to kind of mention this because, I think it's, you kind of learn the pattern, and then as that pattern changes, why is it changing? Is there a reason why you should change what you're doing in the process? And that's if you're in a heavy trading position versus just a long-term hold. At any rate, I want to thank you all for joining us. Our health tip review today is don't go to bed within 2 hours of eating, preferably 4, to let the food digest and no cancer in upper respiratory area. Number 2, 25 leg lifts a day, great idea. Number 3, from Mr. Petrobono, 2 or 3 times of weightlifting a day can help with bone density, or 2 or 3 times a week. Number 3 is consider a 5-2 or other sort of fasting diet as a way to improve mental faculties. And then, as usual, we've been sort of talking about sleep and the need to sort of get a rhythm of sleep that you maintain constantly because your body prefers that to varying to bed and to wake times. So maintaining those times even through the weekend is actually a good idea, and you'll feel better in the process. At any rate, wanted to express gratitude to all of you for taking time to watch and spend time with us. Hope you found the information useful today. We're going to do a show tomorrow focused on the transition we've made in phones and some of the interesting things we learned about different firms. And no, Verizon does advertise they're the best, but I'm shocked to find that we've had great both pricing and experience with T-Mobile, and look forward to covering the how and whys of that on our next regular show tomorrow. This is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss, German au revoir, French Lihitrot, Hebrew Chod Ahafez, Farsi, Hejdo, Swedish, Zdravstvuyte, hello in Russian, Ni hao ma, hello in Chinese. And in Jamaica we say, Enough respect, walk good man. Thanks for taking time out to join us. Have a great day, and bye for now.